Welcome to the weekly market wrap-up. I'm Hannah Bernard. It's a story of close, but not quite enough, as major indices neared record-breaking highs this week, only to close relatively flat, with the benchmark S&P 500 in particular failing to build convincingly off of last week's record-breaking highs. Are institutional players leaving the markets, or does this bull still have legs to run? Let's get to it. U.S. markets had a relatively slow performance on Thursday, with the Nasdaq Composite Index leading the way, finishing the session 26 points up to make 4,318. Statistically speaking, the tech-centered index is within 15% of its all-time record close. Now, on the other hand, the S&P 500, although closing Thursday at another record, has done so at a very small margin, raising questions about whether a correction is looming. Canadian stocks also challenged three-year highs on Thursday, boosted by bank earnings and buying of mining stocks on stronger gold and silver prices. The Toronto Stock Exchange gained 26.16 points on Thursday to close at 14,214. And the Toronto Venture Exchange also closed up on Thursday, gaining over 1% in value to close at 1,019. So does this bull market still have legs to run? Well, on paper, the S&P is up 170% above its 2009 bottom, and Charles Schwab chief investment strategist Liz Ann Saunders believes that the bull run is not over yet. As evidence, stocks largely have shrugged off disappointing economic news, including weak job creation, slower manufacturing, and slumping consumer confidence. However, there has been a trend in professional investment behavior this year, where more traders are selling out of positions during the final hours of trading, favoring safety over speculation. Let's turn now to currencies. The U.S. dollar index started the week off in a subdued manner as traders digested reports of tentative negotiations in Ukraine. However, rates shot up quickly by midweek as a result of weakness in several global currencies. The dollar-yen pair twerked through a particularly choppy week as disappointing U.S. economic reports combined with growing disillusionment regarding Abenomics kept a lid on momentum. The euro took a heavy decline late Wednesday following very tight trading earlier in the week. As expected, growing concerns regarding the financial stability of Ukraine weighed heavily on investor sentiment. Now over to winners and losers and our picks for the week. The winner for this week is ExamWorks Group, ticker symbol EXAM. Shares jumped 17% midweek, hitting an all-time high of $36.84 after the independent medical examination and credential company announced fourth quarter results that surpassed analyst expectations. The company said its fourth quarter loss narrowed year over year to $1.5 million or 4 cents a share, while revenue increased 13.8% year over year to $158.8 million from $139.6 million. The main concern moving forward is its gross profit margin, which is currently lower than desirable at 33.82%. The loser for this week is JP Morgan, ticker symbol JPM. Embattled chairman and CEO Jamie Dimon took another setback to his reputation when the bank announced massive layoffs on Tuesday, following a less than stellar performance by its mortgage lending business. In total, 8,000 jobs will get the axe, with 75% of the cuts coming from the mortgage division, with the remaining pink slips being distributed to the branch and credit card networks. Shares on Thursday were down 2.4% for the week. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. On Tuesday, Smith & Wesson with an EPS estimate of 29 cents. The gun maker and many of its competitors have been at the center of controversy as the debate over gun control and gun violence continues. Also on Tuesday, Radio Shack Corp comes out with an EPS estimate which calls for a loss of 40 cents. And on Friday, we'll see Foot Locker with an EPS estimate of 75 cents. Checking in on Canadian stocks to watch next week, we'll start the week on Monday. We have Magna International with an EPS estimate of $1.49 compared to $1.67 in the prior year quarter. On Tuesday, Bank of Nova Scotia comes out with an EPS estimate of $1.33 compared to $1.27 in the prior year quarter. And lastly, on Friday, Constellation Software Incorporated with an EPS estimate of $2.51 compared to $2.94 in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street and BayStreet.ca, I'm Hannah Bernard.